Firstly, this strategy heavily relies on Tesla's technological advantage in self-driving technology. The carmaker is the only business that is actively working toward a general driving solution that is entirely AI-based. As it continues to move closer to complete autonomy, the FSD software marks a turning point in Tesla's ambitious path. To stay updated on all things Tesla, before we go on, please hit the like button, subscribe, and enable post notifications if you enjoy this kind of information. Tesla's achievements in EVs and fully autonomous driving are well known and warmly praised, but it's important to highlight their less well-known forays into energy and artificial intelligence, AI, which have enormous potential that has yet to be realized. In 2021, Tesla's solar business, which represents the company's entry into the energy sector, generated an astounding $81 million in sales. This market, which includes solar technology, Powerwall storage devices, and the powerful Megapack, is only beginning to show off its potential and offers promising opportunities in the future. Indeed, financial analyst Gary Black predicts that by 2023, Tesla Energy will have made an incredible $20 billion in sales and an even more astonishing $8 billion in gross profit. This information reveals an underutilized catalyst that might have a big effect on Tesla's financial situation. The carmaker's emphasis on exponential technologies, such as improved batteries and high-speed charging systems, creates the groundwork for a transformative future powered by innovation. What about its automobiles, though? Even though Tesla's electric cars are already market leaders, they are still developing. Tesla is in a competitive advantage because to its dedication to updating the interiors of its vehicles and aiming for a sleek and contemporary aesthetic. To achieve a more stable and comfortable ride, Tesla's well-known Shanghai facility, for example, completely optimized the Model Y suspension system. Similarly, the forthcoming 2024 Tesla Model 3 is expected to provide improved drivetrain efficiency, yielding an increase in electrical output. There's no denying that Tesla's initiatives, especially the next-generation EV, have been delayed considerably. But we believe there are good reasons for Tesla to be producing its next-generation car at such a slow pace. Martin Vicha claims that the company has actually been supporting a next-generation electric vehicle, likely the Tesla Model 2, for nearly 3 years. With Tesla serving as the product hero, he asserts that this is a skillfully designed ad campaign to inform non-owners about the advantages of EVs versus ICE. It would do much more than just lower the cost of cars. He also brought up the fact that the street's current projections for Tesla deliveries in 2023 and 2024 are now lower than they were at the beginning of the year, before any price reductions. Thus, it's possible that a less expensive next-generation vehicle will alter Tesla's delivery narrative. Then there are the semi and robotaxi. Concepts for robotaxis offer a clever way to grow the industry. It redefines mobility by making it possible for those who might not be able to afford to buy a car to still be a part of the Tesla ecosystem. In a similar vein, the innovative Tesla Semi, which provides an affordable alternative to electric vehicles, is set to transform the shipping sector. To make it unique, it is no longer only about cutting fuel costs, but also about doing away with the need for human labor. Tesla wants to be the best in terms of battery technology, dependability, safety, and affordability. In addition to being a technological marvel, the future Tesla model will also be reasonably priced and available to a larger range of people. Elon Musk, the CEO of Tesla, has stated that he sees a huge market for the company and places accessibility and affordability above simple profit maximization. With each price reduction, Tesla will increase the size of its entire addressable market and attract ever larger consumer bases. In 5 years, how much do you think Tesla will be worth? Please share your assessment of Tesla in the comments section below, and don't hesitate to click on the following video on your screen to learn more about Tesla's recent activities. I'll see you over there. Ron Barron has revealed why he believes that Tesla is the best investment strategy of our time, and retail investors are engaging in some very interesting activities with the company. If you're an older investor looking to maximize your income, this is a wonderful time. On the 10-year, income levels, guaranteed rates haven't been this high in about 25 years. The government's 5% guarantee combined with 3% annual inflation is a wonderful return on safety. However, the stock market gains 10% annually on average over the long run. You will therefore never be able to save enough money for a long-term goal, such as retirement, if you accept 5% annually. If I'm a youthful investor, the yield on a T-bill is still not attractive enough to justify choosing it over Tesla, which has enormous growth potential in the long run. Every investor's goal is to achieve a balance between stocks and bonds, and at Kerber Kosak, we do just that by helping you assess your risk tolerance and structuring your portfolio accordingly. The conviction in Tesla's long-term growth potential is a key element propelling the stock's rise. Companies that provide not just financial returns, but also a feeling of purpose and creativity tend to draw in retail investors. Many retail investors that place a higher priority on investing in businesses that share their beliefs find resonance in Tesla's ambition to expedite the global transition to sustainable energy. After investing a record $17 billion in Tesla shares in 2022, individual investors invested an additional $13.6 billion in the first 2 months of this year, according to data from Vanda Research. This clearly shows that a lot of investors have an idea about Tesla. Even though some people disagree, this is nonetheless true. This is due to a few factors, which we will discuss in more detail throughout this video. So take a seat back, unwind, and let's examine the techniques for investing in Teslas. Who receives the most stings? Based on the inflows you're seeing, whose investors will suffer the most from this? Individuals who lack knowledge about trading commodities, a topic I would be happy to discuss briefly. To address your query, however, people who have actually been sold 2 things know that growth stocks will always do well. Yes, relatively speaking, but we are aware that they can buckle under stress. Regarding the large crocodile chart you are viewing, which shows the spread between growth and small caps with the jaws spread so far, we know that if the small caps fall, the top jaw will also have to fall. Those who believe they can perform dollar cost averaging should just continue purchasing dips, since it could take years, possibly 2, 3, or more, for those numbers to return in terms of those growth stocks and even the dividend-bearing firms. The market might not tumble as dramatically if we enter a state of stagflation. Rather than watching the stock decline, you need to know when your dividends are taking over your life. Since passive investors always stand to lose the most, we constantly work to spread awareness about the importance of include some sort of risk parameter in one's investment portfolio. As a leader in the EV market, Tesla is renowned for pushing the limits of sustainability and EV technology. This is among the factors behind the persistent bullishness of investors such as Ross Gerber regarding Tesla and its stock. Since Tesla is such a fantastic investment opportunity, Gerber has long emphasized how important it is for investors to include shares of the company in their portfolios. Welcome back to Tesla Tomorrow, everyone. Let's take a moment to appreciate the incredible journey of Tesla stock over the past few years in order to fully comprehend the reasons behind the spike of retail investors purchasing Tesla shares. The stock of Tesla has been steadily rising, attracting the interest and imagination of investors across the globe. Tesla saw its worst annual performance in history last year, falling over 65% after skyrocketing throughout the pandemic. Fears of a recession and increased competition in the electric vehicle market contributed to this, sending shares plunging below $110 at the end of December, a 2-year low. But things have been different in 2023. Though things haven't always gone well for Tesla, the company still has a long way to go before reaching its desired growth rates, as evidenced by the recent increases in the stock price.